Welcome back. Now, HSBC has written a note yesterday which says that the Indian passenger vehicle industry, and they title it Rise of the Tail. So it basically means that in the last 1 decade, India's passenger vehicle market has consolidated. The top 6 OEMs, which includes your Maruti, Hyundai, Tata Motors, M&M, Kia, etc., they have increased their market share from 80 to 94%. This is over a period of FY15 to FY25. But some of the smaller players like Volkswagen, Skoda, Renault, Nissan, Honda, MG have seen their volumes fall due to uneconomic levels due to poor product pricing and fit. But now HSBC argues that some of these tail OEMs, the smaller ones, the Skodas and the Nissans we spoke about, are planning a comeback. And the next 5 to 10 years could be more favorable than the past. Now, this would have long-term implications for some of the incumbents too. Yogesh Aggarwal, the head of research at HSBC India and the author of this note, is joining in on the show. Yogesh, first, just give us the big picture overview of this report that you have written.
Hi, Rima. So, look, Indian passenger vehicle market has consolidated quite a bit over the past 10 years. So 10 years back, they used to be 82% of the market. Today, almost 94% of the market is captured by the top 6 OEMs. And the bottom 8 or 10 are just 6%. So they have seen significant deterioration in the market share. And while it's going to be very tough to come back, but I think the overall backdrop is a little more favorable today than 10 years back for these guys to make a comeback. So that's the broader theme of the report. It's nothing very imminent as well, but something to keep in mind for the investors, for the incumbent OEMs in India.
But what makes you confident now, right? Tell me 2 or 3 reasons that make you believe that some of these tail OEMs will make a comeback.
Yeah, Rima, few reasons. Look, first of all, the cars in India are a lot bigger today. So in the last 10 years, the average ASPs have gone up by almost 100%. Today, the average price of the car is around 11 to 12 lakh rupees. So I think in bigger cars, it's easier for the global OEMs to come and compete and have a much bigger portfolio from just 1 or 2 cars in 1 or 2 segments. Secondly, even the customer evolution has happened. So 10 years back, safety was not the top priority for an Indian customer. Today, they all care for NCAP ratings and overall safety in the car. So those kind of things have also happened. The overall evolution in the taste and the requirements have changed. And thirdly, exports are becoming a lot more big from from India, and therefore, if exports could be a significant part of the overall volumes for any OEM, then it provides economic viability, even if you are relatively smaller in India. And last but not the least, there is just wisdom of hindsight, right? All the mistakes they have done in the past could be rectified in this time.
Okay, Yogesh, have you seen any historical precedents in other auto markets? If you can do a deep dive into that, where French players made a stronger comeback, if there are any examples on that, and how comparable is it to India's setup currently?
Well, there are many examples. So, for instance, Hyundai did very well in US over the past few years and gained decent market share. MG Motors did very well in UK. So there are examples where the OEMs can gain market share. However, I would repeat, it's not easy. I mean, look at China, for instance, on a very other extreme. There are probably 100 OEMs, but BYD is still almost 60% of the overall industry profits, right? So while it's easier to come back from a volume perspective, profitability will still be a challenge. But yes, there are examples from West as well as overall globally where OEMs have come back.
Yogesh, in a market as competitive as the Indian market is, and currently which is also going through a bit of a sluggish phase, if you could call it that, when it comes to demand, how difficult is it for any player intending to make a comeback, because the incumbents themselves are facing issues of their own? Does it make it easier for an incumbent to make a comeback if they have a differentiator product, say for example a Tesla in a hypothetical scenario, or is it difficult to get those numbers in a market like this, with the situation that the current market finds itself in?
Yeah, look, India is always a tough market, but at least there is some wisdom of hindsight now. I mean, there were mistakes done by global OEMs. They didn't customize products for India. They just tried to they just try to force fit global products in India, right? So at least those mistakes could be rectified. And secondly, um, uh, there is an evolution in powertrain as well, right? From pure petrol and diesel, now we have EVs, we have hybrids, and if EVs do well from here and the penetration improves, I think that is a level playing field for the tail OEMs to come back. We have seen in the recent past as well, right? The MG Windsor just did so well from nowhere, coming from behind. So I think this evolution in powertrains as well is an opportunity for OEMs to come back. But yes, I agree with you. India is always a very, very tough market, and demand is weak. Although there is a little bit of a green shoot in July, and we are hoping for a better festive season. But yes, it's been a very, very tough year.
Just a quick word, out of time. So what are the implications for incumbent players? I know this is long term, nothing imminent right now, but what would be the call? And generally, what is the view on passenger vehicles and the long term picture?
Yeah, Rima, so look, as I said, first quarter was very weak. May, June were pretty weak, and nobody really knows. We saw weakness actually across consumer sentiments, not just passenger vehicle, across other consumer discretionary space as well. July, there is a bit of a green shoot, and we are hoping for a better festive season. But overall, we are still expecting a flat to minor growth this year, and we are coming from a high base. From FY15 to 25, the CAGR for the industry was almost 5%, which in our view is the long-term potential for India, and therefore it is likely we will see a muted year. The good thing is new launches are coming, and a large part of the growth comes from new launches every year, and therefore this could revive some demand in the near term. I would also make a point that there is always this narrative that India car penetration is very low. Like we have 30 cars per thousand people, and therefore it's a very high growth market. We have a different way to look at it. I don't believe that India is low penetration. India is a story of market expansion because everyone who can afford a car already has a car. So it's about growing per capita income, and at later point, affordability improving. We are not low. Our penetration is not low.
Got it. Okay, all right, Yogesh, thank you so much for joining in with your take on what's happening with the automobile sector. That's the word coming in from HSBC, but we'll slip into a short break. We'll get you more on the markets on the other side.